All right, everybody, welcome back here to the channel. Taiwan Semiconductor just had their earnings and they were outstanding. Yet we're still seeing a sell-off in the broader AI market, especially the semiconductor stocks, memory stocks. And honestly, there's a move that I recently made, and I wanted to kind of share this with all of you because I do think this could be super helpful. We've seen names like Micron and Sandisk and SK Hynix, Samsung. These names have just went crazy over the past year. And we're getting the biggest pullbacks in these names. To be expected, right? When things go up 300, 400, 500%, we're getting these sharp 20, 30% corrections. And so one of the moves that I made today in my portfolio I think is super useful, it's helpful, and it's not getting yourself out of this trade, it's just de-risking a little bit. So if you're like me and you've been in some of these individual names and you're looking to maybe get exposure to these names without direct exposure, I'm going to give you a number of different things that you can do to put yourself in a really good situation to get the bulk of the AI trade, including energy, memory. I'm also into robotics. That's kind of a separate theme. We'll talk a little bit about that later on too in the video. But as I mentioned, these names like Sandisk and Micron, I mean, they've just went absolutely berserk. But one of the things that I've done is I've kind of shifted some of those individual holdings into some of the top ETFs. And this gets me broad exposure, but not direct exposure. And a lot of these ETFs have names in there like NVIDIA and AMD and Broadcom. So you get exposure to the chips. A lot of these ETFs also have, names like Vertiv and Eton and GE Vernova, which is the energy and the infrastructure side of this as well. All while still being very much part of this trade. So that's what I wanted to kind of share with you guys in this video. So the first one, this is an ETF that recently just came out too. It's the Roundhill Memory ETF. And before SK Hynix just went public, this was the only way to really get exposure to some of the big chip manufacturers in Korea like SK Hynix and Samsung. But the Roundhill Memory ETF, the ticker is DRAM, DRAM. To me, it's the best pure play ETF for the memory chip boom. So if you're really focused in on memory chips, they only have 21 holdings in here. It's highly concentrated on the big players like Micron, Samsung, SK Hynix. And between them, they control about 89% of the DRAM market and 98% of the high bandwidth memory market. Just these names alone. So these are your top three holdings, making up about 70% of the entire ETF. But you still have some decent exposure to some other areas to when these things come down like they have, you're not feeling that direct pain, right? You still have some other things in there that can kind of prop up your overall portfolio. So, and listen, some people out there just would rather get exposure to the names individually, but I think for some folks who've seen their portfolios balloon over the last year with these individual names, they might want to de-risk a little bit. And this is a great way to do it. So the fund just started in April on the Roundhill Memory ETF too. Another one that you can look at is iShares Semiconductor ETF, and it's ticker SOXX. It's been around for much longer. It offers way more broader exposure to the entire chip sector. It also includes the silicon that goes into everything from smartphones to automobiles to data centers. So that's a really interesting play there as well. You get some exposure to AMD, NVIDIA, Micron, and some of the other, big names in the chip space. You've also got the Vanguard. You got the Vanguard version of this as well, which is, another way to play it. Roundhill also has another ETF that I really like. Roundhill Generative AI and Tech. So it's probably the most diversified of all the ETFs out there. You've got a mix of the memory chip makers, AI chip makers, software companies, and you also got some of the hyperscalers in there as well. Google, you've got Nibius, which are two top 10 holdings there. Nibius has been phenomenal. That's been another stock, NBIS, that is just completely outperformed, but it's pulling back pretty hard right now. If you're in that name individually, you're really feeling it. If you've got exposure to that name through, the Roundhill Generative AI and Tech ETF, you're able to withstand some of that volatility. Another one that I really like that's treated me well here in 2026 is AIPO. It's only up about 40%, which we say only. I mean, we're so used to massive gains right now with the AI build out in the early stages. But AIPO, to me, has been a great place to kind of store some of my wealth and kind of DCA instead of putting it into the S&P 500. Now, we are starting to see something happen that's kind of interesting. I'll get to that in a minute. But the AIPO ETF, you're going to get the names, your NVIDIAs, your AMDs, your Broadcoms, but you're also going to get Eton and Vertiv, a lot of these energy companies. What I found is the energy companies, quite a bit less volatile than some of the chip manufacturers. So to me, I really like it. I think energy is probably like the lowest risk bucket in this whole AI build out because there's just not enough of it. and you have a couple big players. GE Vernova has been one of my best trades over the last year and a half, 2 years. Now, we say all that to say we are starting to see a shift. Money is starting to rotate back into the hyperscalers. Apple today has looked phenomenal. Google and Amazon have performed exceptionally well here over the last couple months. So we're seeing the scales kind of tip back, right, and come out of the memory names and back into the more big spending companies, the people who are spending for this build out. And I think that'll kind of continue for a little bit in the back half of this year. But overall, these are going to be phenomenal sectors to be in. Overall, across the board. Memory, network testing, semiconductors, hyperscalers. But I think the next big push, the next big thing within this AI build out is physical AI. And I've been saying this a ton. If you've been watching these videos, you've kind of, picked up on this. Robotics. What is AI going to touch? That is what I think the next big trade is going to be. And I'm hoping we can find some of these private companies that have already been born out of the AI build out, like a ChatGPT and Anthropic. My hope is we can find some of these in some other ETFs. One that I really like is RoboStrategy, the big company there that we're watching, Figure AI. These are all private companies today, but in the next 5 years, a lot of these companies will be public. And if we get to be early to the ChatGPT of robotics, then we're going to be setting ourselves up tremendously for the next decade. So that's what I've got for you guys in the video. Appreciate y'all for watching. Let me know your thoughts down below. If you like this style, let me know what you want more of, less of. Happy to kind of do this stuff. As you guys can see, pretty chill right now because I'm actually in Scotland right now, traveling. So I don't have the whole desk and all the stuff that I usually do, but still wanted to just kind of, make some videos for you, give you guys what I'm thinking, and give you some updates on the market. So subscribe for more. Appreciate y'all for watching.